Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as we view the Australian dollar, it has successfully broken above the 60-day simple moving average resistance at 63 figure 30 last week, which is now reinforcing a bullish outlook for the currency. This technical break suggests growing upward momentum, with traders now eyeing a potential trajectory towards a region of 65 to maybe even 66 cents. The move high reflects improved sentiment driven by a softer US dollar as it drops towards a region of 106.60. With Tuesday in the spotlight, speculation is mounting that the RBA may cut rates by 25 base points to the official cash rate, bringing it down to 4.10%. If seen on Tuesday, this would mark the RBA's first rate reduction in 4 years, signalling a shift in monetary policy. Traders will closely watch the central bank statement for guidance and on future rate moves, while also this week we get an update on the unemployment too, which could further influence rate expectations. Additionally, markets will also pay a close attention on Friday's RBA Governor Michelle Bullock's speech for insights in the central bank's policy trajectory and economic assessment. Any pullback is likely to be short-term, with bargain hunters expected to be looking around 62.80 to 63.20. The euro dollar has rallied now for the 5th consecutive day, hitting its highest level since late January, as the US dollar, as I mentioned, dropped to 106.60. The greenback weakened on Friday after the US retail sales dropped 0.9% in January, surpassing the expected 0.1% decline. December figures were revised up to 0.7% from 0.4%. Weak data may fuel rate cut bets, though the Fed is expected to hold steady through the next 3 meetings, with a 50% chance of a cut in July. Powell has reiterated that the rates could stay higher for longer if inflation remains above target. So as we turn to the technicals, the market is a little bit overbought, but overall, since clearing the 104.40-45 level, expectations of 105 figure 20 for the challenge is high. That may exceed on towards 106 and reassess from there. Any weakness likely to find support around 104.10.20. The bears are back when it comes to dollar yen. Since rejecting that region of 154, the market has tumbled and now looking further to the downside. That could see a move towards 151 or even to the call that I had recently of 49.2060, which was heavily contested back here in November. Nevertheless, the technicals have broken down, and from the heavy candles that we're seeing here, the bears are weighing and likely to succeed, I feel, to their target, with any upside attempts is likely to be short term, with resistance seen around 152.45. Sterling, well, since this call of the invest and shoulders, I still feel the upside trajectory could be towards this region of somewhere around 129. I like the way the technicals have unfolded for this market, and as you can see from the ADX supporting a strong bull trend, let's see if the rally can continue on today and reach around 126, and as I mentioned, onto 127, and with the trajectory given from the head to the neckline where it cut of 129. Turning to commodities, the precious yellow metal displayed a sharp decline and finishing the New York session with an engulfing candle. It is viewed that the market may actually find further weakness as safe haven demand somewhat lackens. A break of the levels seen somewhere around the region of 2,868 may confirm this candle and see a further decline down towards the region of 2,850 to 2,830-40 area before bargain hunters return. Keep an eye, as I mentioned, on this level around 2,868 to support this engulfing candle. Otherwise, we might find a quick return if we don't get the confirmation in demand and see a move back to the call, which everyone seems to be looking at around $3,000 an ounce. Wrapping up with oil, the market took a tumble after rebounding and back towards that key level of 69.60-80 area. I still anticipate, given the fact that the technicals are still somewhat recovering, that we may see another bounce off this level and look on towards the region somewhere around 71.60-80 and with the broader call still holding to 73.30. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report, and I hope you enjoy the great start to the new week.